Thank you, Carrie, for the introduction. I see here we have 77 participants, so we'll start a little slow and allow some people to join the webinar still. But again, thank you so much. So my name is Andrew Wood. I work with OPUS Consulting Group, and welcome to our webinar today on financial contingency planning. We're going to talk about strategies to protect your cash and explore financial opportunities. Let me just briefly also introduce my colleague, Jacques Santucci, principal of OPUS, and then we'll start digging into some of the details of our presentation today.
Well, good afternoon, everybody. Thank you for having us. And thank you, Carrie, and the American Camp Association for having us. Also, thank you, Jim Chalmers from Chalmers Insurance to think of us to present this afternoon. So Jim, thank you for, again, for your support, and thanks for supporting the American Camp Association.
Great. Thank you, Jacques. Let's tell you a little bit about OPUS Consulting Group first. You know, why are we here today? OPUS Consulting, we are a cross-functional team of management consultants, and we help clients from a range of issues related to finance, restructuring, but also how to communicate with your customers and develop strategies and operational strategies. And we're here to support the pandemic efforts. As you can see, I have 3 children. I'm also working from home. I have my little mascot here in the background, Longest the giraffe. And what we're hoping to do today is provide you with a framework and a different way to approach this pandemic and navigate the sort of the realm of uncertainty that's in front of us. But hey, Jacques, do you want to add any other points?
Yeah, I've got another point. You have more than 3 kids. You have one that's what, 2 months old?
Yeah.
So please, everybody, feel for my friend Andrew here.
Yeah.
Yes. No. Next slide. We want to kind of show you what's going to be on the agenda this afternoon. So we're going to discuss, like Andrew mentioned, an approach to financial contingency. And we have 5 parts in our presentation. The first one is around contingency planning steps. And Andrew will talk about a checklist and a framework, how to think about the contingency planning. On the second part, we'll talk about cash management and understanding the cash flow drivers and how to prepare not only a weekly cash flow, but also a monthly cash flow and how to test it. On the third part, we'll talk about communication and coordination. Those steps are very important right now. Communication is key. And then at the end, we'll talk about financing option or funding option and opportunities and how you can navigate and come up with some ideas. And finally, we'll be open to any questions that you may have now or even later.
Great, Jacques, thank you. And I see we've had a few joiners. So again, welcome to Financial Contingency Planning webinar with OPUS Consulting Group. Jacques Santucci is here joining as well. And we're gonna jump right into our first step, the framework of how to assemble a financial contingency plan. So we put together a 7-step checklist that allows companies to navigate this area of uncertainty. And I just want to touch on these briefly. This contingency plan is structured to be comprehensive, to assess uncertainty and to really not leave any stone unturned. But the first step is really to create awareness, educate yourself from the CDC website, and reach out to trade associations like what we're presenting here with today on what are people doing in the industry, benchmark yourself against others, and demonstrate purpose that you are here supporting the pandemic efforts. The next step is really protect your employees and assets of the company. What this means is ensuring that your employees are safe, that you're doing the right things, and that you're following the appropriate guidelines. The next step here is where we'll focus a little bit more.
Andrew.
Yes, please.
Assets means also your property, your brand, you know, all the things that are around your business. So employees right now are number 1, but, you know, don't forget to keep, you know, to maintain your properties. Don't forget to update your website, your social media, your brand. Those also are your assets, and that's very important.
Absolutely. Thank you, Jacques. Step 3 is establish a focused response team. So oftentimes individual owners are the one person kind of controlling all things. You want to be able to delegate and have people with certain areas that that they're focused on. So if we think about what these four or five areas are, is communicating with customers, assessing the external landscape, and conducting your internal financial stress testing, and the internal communication with employees. Point 4 is conduct the actual stress test planning, and we're going to demonstrate a financial model today and what that looks like to give people an idea of how to approach these type of issues. And also point 5 is managing your upstream, so managing all your suppliers and vendors, the people who you pay that help you run your business. We're going to talk about managing the downstream, so what do you need to do in order to communicate proactively with your customers and ensure that you're maintaining your brand and everything that you've built in your business to date. To encapsulate all this is point 7, is coming together with your strategic focus group with all the information they've gathered and have a tabletop meeting where all the information is laid out and you go through a process of establishing your financial contingency plan. Just to point out, we have a separate webinar on our website that just focuses on the 7-step contingency planning checklist and goes into it very detailed. We felt it was important for today's webinar to focus on only certain parts of these because we're already further along in the pandemic, and we felt it was more relevant to everybody here to focus on the most critical items.
So you might think that your company is unique, but at the end, you know, all the companies are following the same steps, and everybody's feeling the same challenges right now. You know, if you have to think about talking to your colleagues, your friends, your boards, but those 3 common challenges are the one you see on the screen right now. You know, all your stakeholders are impacted, you know, from the staff to the customers, the vendors, the bank, everybody is impacted. So everybody understands the situation you're in, you're not by yourself. The second point is cash flow is a major challenge. And so at that point, you know, you have to look into every piece of the cash flow and address every piece. And sometimes it's a little bit painful to think about those drivers, and we'll talk about the drivers in a few minutes, but those are the things you have to think about. And the final thing is, we don't know when this is going to be over. And for sure, with the camp industry, just like the hospitality industry, the restaurant industry, all those industries that have where people connect to each other, it might be even more unknown than what we can read in the press. So in this case, you know, you got to assess your current situation, but look at months and weeks away, and then also the cost to restart. You know, how, not only when, but how you're going to restart. And so those are the drivers that you have to think about now.
Great.
We look at it as a kind of a matrix. A matrix where the stakeholders and the time are meeting. Andrew, you want to talk about the few action plans that are in that matrix?
The reason we like to present this slide is this is roughly what an end result of your financial contingency plan should look like. It should be a simple matrix that infers your action items. It talks about which points are very urgent and critical, cash impact of different scenarios considered in its timeline, trigger events. So when is option B no longer available? Now we're at option C. Who's doing what and the responsibilities, and what resources you need to employ to perform the certain actions and communicate with these various stakeholders. I also just want to just some housekeeping stuff. I see we had a few new joiners. We'll take questions at the end. Please, if you have questions, just feel free to put those in the chat, and Carrie will help us work through those towards the end of the presentation. Jacques, do you want to talk next about opportunities for cash management?
Yes. So cash management is crucial. So, you know, if, you know, feels like some of you may actually discover what cash management forecast is, and but you know, it's one of the basics of business. You know, what is my cash flow, and where is my cash flow going? So I think every businesses right now is looking at their cash flow very tightly. And those are the things that we recommend. First, you have to understand your position. Where are you? So look back and look at what you paid last year, what you paid last month, and look at your contract and then understand what your liability is, what you really have to pay. On one of the clients that I'm working with, it's we had to go to last year, and they are managing several hotel properties. And we looked at last year, same time. You know, what happened last year should have happened this year. So what are we paying this year that we should pay, that we paid last year, and what should we not pay? Financial resources and understand your options. You look at your contract, look at what's available, what you should do. So it's a little bit tedious, but that's the step number one. Then step number two is let's look at the cash flow driver and review your customers, review your deposits. You know, deposits should have been kept in a saving account until the revenue is recognized. I also recognize that's probably not the case for a lot of you. So look at your customers, you look at the deposits, look at the program you have in place, and then communicate full transparency with all the stakeholders, with the customers, and anybody who's involved. And the final thing, and Andrew will demonstrate how to do a cash flow in a few minutes. Well, let's plan for it. Let's put numbers, let's use Excel, and let's build a cash flow model that you can update easily on a weekly basis. So a lot of questions comes, why 13 weeks? Well, believe it or not, it's a kind of a, it's a industry standard for us. You know, in the time of turnarounds, usually we always look at 13 weeks, and it's a good kind of time frame to look at what the cash flow will be for a business. So we use 13 weeks to model, but in this case too, we're going to look at monthly, because for most of you, in 13 weeks, it's nothing. And then we need to look at until the end of the year.
Ryan, we added that on to the model we're going to look at today because we wanted to capture some of the considerations around the seasonality of the business and what it looks like to reemerge after this is all over.
So
Jack, you want to go ahead?
No, cash flow drivers.
Yeah. So what is a cash flow driver? It's not just some financial term. It's certain businesses have different cash flow drivers. What's important is to understand which ones are most critical to your business, and those are the ones you want to focus on. So what we're looking at here is a way to segment the different cash flow drivers and then examples of the strategies. So the pricing, you know, there's discount and rescheduling options around your pricing. Staffing, we look at variable versus fixed costs. When I look at which costs can we go without when we don't have any revenue, and which ones can we not, they're fixed to us. And then also considering your debt service. So this is a methodical approach to go through your company and to think about different strategies you can approach for each of these drivers or levers that you can pull and push on. Jacques, can you add anything to this slide? Maybe talk about
yes.
balance sheet items.
On the cash flow drivers, you want to think about two segments, right? We got a little bit of accounting here, profit and loss and balance sheet. But on the profit and loss, you want to look at its money coming in as revenue and expenses. The balance sheet is more things that are delayed to make it simple. So some of the expenses you have to pay on time for whatever reason, you know, like staff or rent, usually debt service, they usually come at the same time of the month. But, you know, payable, right? You may have some invoices that you don't want to pay right now. So you might want to think about what can I delay, what can I pay later, what can I negotiate? Same for account receivable here. Account receivable in the case will be the tuitions that are due or the camp fees that are due, or in the same pocket, you would think about the deposits that you received. So you want to collect cash if you can for future deposits, maybe for later in the summer, but also you want to keep the deposits. So you want to convince the parents or you want to convince the campers to keep their reservation or to keep their camp time just for another time, maybe for next year, maybe for later. That goes with, you know, thinking about the flexibility and the loyalty of the campers, and also look into your programs. And then the last part here is on inventory or capital expenditure, all those things that you may need to buy, but maybe you can delay. Maybe not repainting cabins and things like this. Maybe have to wait unless you have the product on hand. That's a good time to actually do some maintenance. So those are the drivers that you want to map. You want to map all those drivers based on your business, and account the one that you can have to pay now, or you can receive the cash now, and the one that you can delay.
Thank you, Jacques. Just to add an example, for example, so accounts payable, money you have to give out. Another way of looking at this is the unearned revenue from the deposits that you received. We have in an associated industry, in the hospitality industry, there's a lot of pre-deposits received in hotels for Campers Weekend, which I believe is in July. And there's some certain strategies that have been developed to push the cancellation date forward to extend that cash out of fear that, there's going to be a whole host of cancellations. That's just one example that I can think of what businesses are doing to tackle these drivers and preserve cash.
Which is, and maybe we're ahead of our presentation, but maybe that's something also to think about. The campers actually bring a lot of business around you. You may want to reach out to hotels and other industries that are related to you somehow, and see what they do, and maybe you all work together to offer packages and communication.
Right. So not just looking at your peers in the industry, but also what are other businesses doing associated with where you're at in the industry?
But what do we know about the coming season? And that's the next slide that we want to present to you. Let's think about some scenarios. So usually we didn't get into details on each scenarios because each of you have a slightly different business. You have different programs, different clients. Overall, we can think of 4 scenarios at this point. One is limited spring and a full summer. No spring, full summer. No spring, limited summer, and then no spring, no summer, and then everything is delayed. And so based on those 4 scenarios, and maybe a 5th or 6th one that you may think of related to your business, you then can think of those 4 buckets of things to address. First, the program, right? Nothing here about revenue or dollars, but let's think about your business. Do you need to reschedule, modify, or cancel the programs? Also, how do you want to do it? Andrew and I had a conversation a week ago about camps going online, and it probably doesn't apply to everybody, and it's probably not that easy. But there's new medias you probably can use to expand or get some cash in. Outreach to other organizations. I think one important point for camps is the loyalty to your businesses and the alumni network. For those of you who have businesses for decades, I think you probably can think of reaching out to them and see if they can help you in those tough times. On the revenue side, obviously you want to reschedule, you don't want to cancel, so you want to keep the deposits. So the hospitality industry, we mentioned it a few times, been very creative to try to keep the cash, convincing people to come at a later time, reschedule the programs, or have a cancellation policy that's 2 or 3 weeks out, so you have a chance to keep a little bit more cash and adjust. Add programs in the fall and things like this. On the expenses, we just talked about it. On the staffing part, we want to mention the J1 visa. I think a lot of you have staff that come from abroad. So that's also something to think about and how you're going to adjust this. But you want to negotiate all those expenses. And for sure, we're going to talk about it in a few seconds. You want to negotiate your debt service. And finally, in all those scenarios, you want to look into the impact of cash flow. You want to prepare. And you may want to think about the new camp 2.0. Think about what you're learning from this time, and how you're going to change your protocols, how you're going to change your employee handbook, your employee communication, your parent, your campers communication, refund policies and things like this. So this is a matrix that you may want to build and work on to come up with your scenarios.
Thank you, Jacques. So again, this matrix tries to help people think about the range or the universe of potential outcomes that you might be facing. And what we're going to be looking at next is a way to tackle that and sort of synthesize that information so it's manageable and people can start thinking about what needs to be done and also how to communicate a potential plan to an investor or another partner. So what is financial stress testing? It looks at different scenarios. It takes into consideration things that are external in the environment, but also in the business, what you can control. And the reason why it's necessary is it helps develop credibility with creditors and shareholders. It ensures that you don't have blind spots that you haven't considered. And it's a way to relieve uncertainty during these times and reemerge as a thriving business after it's all over. Jacques, do you have anything else to add to the financial stress testing?
No, I know you're the expert in stressing.
And stressing out, yes, thank you.
Right. Stressing out too. No.
So what I'm going to do here is share a tool that's, and Jacques, can you see my tool here?
I can see it, yep.
Okay, all right. So this is available for download on our website. We'll update it after today. We've added some new functionality to try to include something that's monthly as well. But let me first just orientate people around the framework of this tool. So this is in Excel. There's many different cash flow tools out on the web that you can download. But this is one that we've developed, and we wanted to give people an opportunity to see how these tools are used and talk about some best practices in making these things work. So let me just talk a little bit about the format here. It's not a financial statement. It condenses what's most critical to the business into one statement. So we look at cash in. And so this business here has this much cash coming in over a 13-week period. It looks at cash out. For this particular business, we decided that the most important variables was our staffing, which is variable, and our direct variable costs. So that could be food input, that could be other materials needed for a campsite, and we made specific assumptions based on that. And then we have a section of fixed costs. So fixed costs are, what costs do I still have to pay if there's absolutely no revenue and I'm closed for business? Beyond the fixed costs, there's the non-operating costs, which is really your debt service. And this is the section where you want to be able to talk to your bank. And then at the bottom here, we're looking at the actual cash, the ending cash level of the business. So this is the format and the layout. When we talk about our different cash flow drivers, for this business, we've chosen just the 3 that we wanted to look at. And we've looked at 3 different scenarios: so a worst case, a base case, and a best case scenario. And then here's the original budget of what we thought was going to happen. So right now we're looking at the best case scenario. The best case scenario here says, well, we're just going to be shy a little bit on our cash. And this is where somebody in the business can look at and say, we believe there will be no revenue coming in for a certain number of days. We're going to adjust these variables. And this is how the model's built out. And this is part of that tool that comes into play in point 7 of the tabletop discussion, when you're pulling all the inputs from everybody else and actually trying to figure out what you're going to do as a company. And so just to demonstrate how it works. Yes, Jacques, go ahead.
So here, the point to keep in mind is we are maybe on week 1, and it shows that in week 12, we got a cash issue. It gives us a few weeks to address. So, it might be sooner than this, but the idea is not only to look at next week or the week after, but look, 2 months ahead and being able to address the overall problem. So in this case, it looks like they just down a little bit, but if you go to the worst case, I'm sure it's going to show a lot more. Here you go. So in this case, it shows that they have a $60,000 issue, 10 weeks from now. So now they have a few weeks to address this based on the cash they had at the beginning. They know now that in 2 months from now, they'll be in distress. And so it gives them a lot of time. It gives them time, let's not say a lot of time. It gives time to find some options.
Yes, and some people are thinking, oh, this is what I need. I'm going to rush and put this together. Just some quick best practices. This is an important tool to have, but it's important to keep these things simple, easy to use, and easy to understand, because you're going to have to communicate this story that you're basically telling with numbers to somebody that's going to forgive a loan, or that's going to help out or make an emergency line of credit investment. So there's the base case, and the base case is usually what you think is going to happen, and then you want to have a fail-safe worst case, and the best case is optimistic, but we hope it could work. So this is the 13 weeks cash flow format, and anytime we change this variable, it changes the assumptions in the model. Other cash drivers that we can also talk about is in your principal and in your debt service. So certain strategies around that evolve around talking to your lenders and creditors about a potential forbearance agreement. Going back to your shareholder lenders and saying, could you give us a break on the principal payments for a period of time? They're going to want to know why you're doing that and why you're asking for it and why it makes good sense from a business standpoint. So this is the 13 weeks cash flow. To make things simple, this is tactical. This is day to day. We also wanted to provide a monthly tool. Again, it's the same format, but it extends your view out into the onset of next year's season. And so, again, the original budget, everything looks great. But the best case is there is some shortfall. There's a revival. There will be some business during the season. And then the ramp up is going to be a little bit troublesome when we try to ramp up and when we try to reemerge as a company once everything's over. So yeah, go ahead.
Yeah, so those things those drivers are very important. One of the questions, Andrew, was about access to the file. So I just want to say again, this file is available on our website, opuscg.com, and we'll give you our email address at the end. Feel free to email us, and we'll send you the file. No charge, obviously. We're here to help. And so again, opuscg.com, the file is available. You probably want to wait until later today because Andrew just finished to update this one. So I think we're going to update the latest version with the monthly cash flow, but that'll be available.
Yeah, and this is not one size fits all. There's always a little bit of customization that's required, but again, keeping things simple is so important.
Yeah.
All too often we see people who want to go down this avenue or down this road by themselves, and it becomes if you're not familiar with a tool like this, reach out and ask for help. I'm always happy to jump on a screen share with somebody and dislodge and get people unstuck. So please feel free to reach out.
So the few keys here to keep in mind is be realistic, don't be emotional. I know it's tough times, but just don't be emotional, just be realistic. Also, here we're talking about cash out. We're not talking about that vendor that for 10 years and that you need to pay. If you don't need to pay something, don't put in here. It's those times where you have to talk to people, talk to your vendors, and maybe you delay the payments by a few weeks. Maybe you pay 50% now and 50% later, but you want to be realistic and proactive, which I think leads us to the next slide, Andrew.
Yeah, I'm going to move over and screen share back to the PowerPoint presentation.
So
So this is really important, but go ahead, Jacques.
yeah, I was about to say, so we're moving out of the cash flow management piece now, and we want to address the communication. So if you got any questions on cash flow management and cash flow forecast, again, feel free to reach out. But for the purpose of this presentation, we are now talking about communication.
Okay, so really important, the big points here, you want to be proactive. A lot of other people are also reaching out to the same lenders and the same banks and the same customers. You don't want to be the last person, and you want to be understand that point two is that time is a very important resource to you right now. So again, perfection is not required. Oftentimes, perfection this time can be very wasteful. Keep things moving and keep the lines of communication open. So just to share a bit of a personal story around being proactive and that time is so important. We have 3 kids and they're in several camps. We've had 3 of them, all 3 camps canceled, but they've all 3 of them handled it in very, very different ways. One of them, we just made a big deposit. They didn't get back to us. We asked for if they were going to give us credit towards future lessons, but the communication was just so poor that now we're actually at a point where we don't think we'll do business with them, even if we do reemerge out of all of this. And so there was just a total lack of clarity, and they really didn't understand our point. On the other spectrum, the other one is, the YMCA, for example, we went to go cancel our membership there, and they just simply asked us, hey, just so you know, if you cancel your membership, we're not going to be able to pay our employees. And so could you wait another month? We said, okay, we'll wait another month and see what happens. And the YMCA is doing a great job in trying to stay relevant and trying to connect with all their customers. And so they do provide the daily newsletter. They are providing resources. And so they're trying to innovate and still trying to provide a service in some sense.
Yep.
Yeah, so that's just some personal stories of what sort of sticks out to me and why it's so important to be proactive and to realize that you want to be, time is really a resource in this. The biggest point here under 3 is so often when you're putting these plans together and you're asking a lender or customer or anybody else to change a behavior that's going to benefit you, there's a big incentive to overpromise. There's a big incentive to provide a story that's not going to happen. And sometimes in these situations, your plan and your word is all that you really have, and you're going to be judged on that. And so if there's anything you come away from this is under promise and always try to over deliver on anything that you do and anything that happens. But Jacques, can you add anything to this?
No, I think you cover it all. I mean, we talk to a lot of bankers and investors, and I think that's the common feel. People want to hear what you're going to be able to do. They want to hear a plan. They want a realistic plan, and they want you to over deliver. And that actually leads to our next slide about long-term solutions and planning. One key element here is you want to think about the future, but you don't want to erode your value. Your businesses have a value, and you want to keep the future in mind, not tomorrow. You want to keep in mind the long-term future. So don't be emotional, just be practical. But keep in mind that if you're taking a loan or any loans, there's usually collaterals. We're going to talk about a few loan options in a few minutes, but there's a collateral. So you want to keep in mind that you don't want to erode the value of your collateral if you don't need the money. And that's where the cash flow and the plan comes in place to keep, to be able to plan for the future. The next point is related to this. You want to plan for a good solution. And you want to understand what your future is, looking at long-term financing options, how you're going to restart the camp, how you're going to rehire people. So don't think about the cash you need today, but cash you need in the future. And the last piece, and it's probably also promoting our services and our colleagues, is don't hesitate to reach out to professionals that have done this before, that unfortunately have been in situations like this, not the virus part, but the business part, obviously. And so talk to your lawyer, talk to your financial consultants, your business management consultants, talk to your board. Most of you probably have a board of advisors or board in generals. Talk to them. Maybe talk to your alumni network and see what options, what advice they can give you. And that will help you come up with all the options.
Great. All right. Thank you, Jacques. Let's talk a little bit about the financing and other opportunities that are available. So of course, go ahead, Jacques.
We should mention that this is not an easy topic to approach, right? It's there's a lot of options available, but most of them are right now moving targets. But Andrew, you want to go down the options categories, and we can talk a few words about it?
So short-term or bridge loans, there is a lot of distressed business investing resources on the SBA website. It is a moving target. Deferment or forbearance agreements, those are options with your lenders to forgive a portion of, or for basically delay any payments. And
if you have loans with any banks or any lenders, reach out to them and ask for either deferment of interest or forbearance agreement, no payment for 3 or 4 months. And right now, there's the SBA allows, if you have a 504 loan with the SBA, they already probably contacted you to kind of delay all the payments. But don't hesitate to call your lenders, your vendors, your agencies. You have to keep in mind that their recourse is limited right now. So you're holding the cards in this case, not for too long, hopefully, but right now they're probably going to want to work with you.
And somebody asked me the other day, which ones do I go after? And the answer to that is you want to go after any liquidity that you can, in hopes that you get it. You can still make the decision not to use it. And so if you need the cash, again, time is scarce, and that's generally how I would approach this.
Yeah.
Some of the programs.
Can you go back to the slide before? Sure, there's a point I want to mention. So there's you see some programs like unemployment. There's a lot of tax credit options right now, but that's not going to help really on cash. That'll be for the future. In the case of the camp industry, questions we had in the past was around borrowing from or against an endowment. One is more flexible than the other. If you borrow from your endowment, you obviously control more of the interest, control more of the terms. If you borrow against an endowment, that means a bank is lending money and using the endowment as a collateral. You're a little bit less flexible on the terms. So obviously, if you can do the borrowing from an endowment, it's much easier. Borrowing from an endowment, requires internal paperwork that you have to paper it and keep track of every aspect of it. The borrowing from against an endowment is obviously controlled by the bank. So also another question we had before this webinar was around financing for nonprofits and how to do it. What we've seen, and the nonprofits we are on the board of, they actually are asking their network to help them. And because you cannot really do a gala, or you cannot really do a fundraising event, so it's more difficult, but they are reaching out to their network at large and asking for funding just to go through the tough time. So those are also options to keep in mind.
Great, Jacques. Thank you. So this is not an exhaustive list, but just to point out, Jacques,
Yes.
the
So our company, Andrew and I and all our colleagues, we spent the past 2.5 weeks, if not more, preparing for the first two that are now done. But we've done a few EIDLs and PPP that got accepted, and all of them got accepted and funded. Fortunately, as you read, the program is out of money, but from what we hear, it's going to come back, and they're going to come to help. I hope you had a chance to submit your PPP. That was a great program. In your case, showing that last year your average employee could actually be this year too. And for some of our clients, we actually suggested that they do a PPP and still pay their employees, because most of them were already on site, and use the time to think about the future, work on marketing, working on the properties. But those programs hopefully are going to come back. The others that you can look into, I talked about the SBA loan payment program. It's a forbearance for 6 months, so it delays your usually it's a 504, but all the other loans, SBA loans, delays the payments. The one that just came out last week is the Main Street Business Lending Program. It's a 4-year loan, principal and interest deferred for 1 year. It's a good program for you to restart your business. Like I mentioned earlier, keep in mind about the collateral and how you want to use this loan. It's for the future. It's not for the past. And then obviously you have tax credits of all sorts, and other benefits like paid leave programs. And I would also encourage you to look into your state agencies. In New England, each state have loan programs and grants, so you may be able to find one that fits your needs. Don't hesitate to call us. We're tracking all those programs on a daily basis. And don't hesitate to call us, and then we can work with you and try to find what the best option is, or even the bank to work with. We had some questions about past clients and new clients, wondering which bank and how to communicate with the bank, so we can help you there.
Yeah, and just to add on the PPP program, the second one that was is no longer available. I have heard that should be expanded, but they're also going to change some of the rules around it. So this particular loan had a forgiveness option or opportunity, and it was seasonally based on 8 weeks from the date of funding. And I have heard that there's a lot of efforts being made to expand that and to change that so it'd be more useful to businesses. Let's see. So let's see. Conclusion. We've talked about a lot, and we hope this information is useful to provide a framework to help navigate these times. But just in closing, so having a contingency plan, having the resources to manage these different options, looking at multiple scenarios, really monitoring your cash flows, and having a forward vision, not just looking at the next quarter, but the next season, and protecting your business and value long term is really important, and being proactive and seeking advice from your network, from advisors, and from other professionals.
I just saw some questions popping up on my screen. So
yes, and we would. Yeah. So should we go ahead and take questions, or we have anything else to add, Jacques?
Yeah, no. So I just saw a couple of questions. One was around endowments and borrowing for an endowment. So borrowing is always a tricky situation. If you're borrowing from a bank, it's obviously there's a lot of guidelines. But if you're a for-profit and you want to borrow from a non-for-profit endowment, I would suggest that you contact your lawyer and ask them what are what could be the process. You want to have an arm's length transaction, and you want to have documents around it and terms. So I would highly recommend contacting your lawyer, and they can guide you. As far as the EIDL, from what we heard, the funds have been used, but they're in the process of funding some of those loans. So if you already applied for the loan and waiting for the funding, there's still a chance that it's going to happen. From what we heard is if you haven't applied yet, then it's probably not going to happen. But like we mentioned earlier, there's a new program. There's a lot of lobbying being made. It's probably a good time to contact your senator and your local reps and try to push for more help here. Well, I think at this point, right, Andrew, we probably can take some questions.
Yeah. Carrie, would you be able to field some questions for us? I'm
Yes,
new to
so
the technology, so I don't see them popping up.
so feel free to drop them in the chat, and if you want them anonymous, because I did have someone ask, you can send it to me privately, so not everyone sees that it's you asking the question. That's totally fine. I did have one question came in, guys. Just you've been so generous in offering kind of your services. Give us a call, just to kind of in respect to expense management. One person asked kind of, can you give a sense of what your fees are if a camp was looking to do more business with you guys? I know that's kind of a big question, but I guess, you know, just don't want everyone calling you expecting all of this for free, and maybe, you know, a little guidance on that.
Jacques, you want me to take that one?
Yeah, go for it.
Yeah, sure. So we offer anybody an initial consult for an hour's time, and oftentimes we're able to provide a lot of advice in that initial consult hour. OPUS Consulting Group we've really restructured our services to be able to pinpoint on the most critical items and be efficient as possible. I think there is a minimum investment that people have to make where we can be effective, and that would probably be in the range of $2,500 to $5,000. We charge by the hour, and that's the easiest way I can answer that question, as direct as I can. But Jacques, do you have any other takes on that?
Yeah, no, I mean, you know, we've been, Andrew and I, we've been working together for a long time now, and we've been providing services to our client for, you know, over 10 years now under OPUS Consulting. And so, you know, we create relationships, and you know, our experience comes from our own, you know, business management experience. So we're here to, you know, like Andrew said, you know, we're more than happy to spend some time with you on the phone, on Zoom, and discuss your problem. And if you feel that there's a good fit, then we want to create a long-term relationship. And that's actually why Jim Chalmers, you know, suggested that we present today, because, you know, we've been working with Jim for a long time, and their company is the same way. You know, they've been helping our clients for years by looking for solutions, and we think the same way. You know, we want to help our clients thrive and grow their business.
And just to paint kind of the spectrum, so Jacques, you're full-time CFO now at a hotel group, and that's, you know, you're managing the day-to-day operations. On the other spectrum, you know, I'm working with a small business, and I'm really just there, you know, on an as-need basis, looking at their cash flow projections, pointing things out, and they're actually doing a lot of the work. And so I'm really just there to advise and help them. And so that's kind of the, you know, full service on one side, and you know, let's help you and let's give you the tools that you need so you can be effective.
Another question, Carrie?
Yes, so I had a question come in here from someone wondering if you know of or are familiar with a software called Cashflow Frog, or if not that, do you have any other recommendations for kind of software to help people with this beyond just an Excel spreadsheet?
So Andrew and I, we kind of a little bit of tech geeks somehow. The first thing that I would recommend is have good accounting. Right, so because we've seen too many clients not having not only the right tools, but also the right process. So that's number one. As far as cash flow, I looked at a lot of those cash flow online tools, and you know, it's difficult for me to say, because I think, you know, having Excel is much more flexible. That said, online, I'm sure there's a lot of cash flow tools that kind of allow you to have the ins and outs and enter your numbers. You know, at the end, mathematically, it's not that a complicated exercise, right? It's really plus and minuses. It's really the business thinking and what we emphasized earlier about the planning and what are your drivers, and having all those numbers available for you to add in those calculations and the plus and minuses.
I'm not familiar with cash flow frog. Is that what it was called?
Yes. Yep.
Okay. I'd have to echo some of the things Jacques said, which is oftentimes the information, if the information in your books isn't all that good of quality, we'll go to other sources. And so, you know, we're versed in building these things very rapidly and quickly and being efficient with our time. So, yeah, I'm not familiar with that software.
Another question that's come in, kind of, it's a two-parter, a little bit around deposits. So I'm going to read it, and then if you need clarification, let me know. But basically, someone wrote, if we essentially lived off our deposits and some limited full-time payments over this past winter, so we can't really refund everyone fully, what's your advice on how to calculate what to pay people back? Should people who paid full get a higher percentage than people who paid deposits?
Yeah, so that's a sticky one. That's a very sticky one because, and you know, you're probably not alone, and there's a lot of industries that take deposits. I mean, think about the wedding industry and all those industries that live off deposits through the winter. You know, technically, you're not supposed to use the funds, and you know, you're supposed to have it in your balance sheet and maybe borrow against it, you know, with a line of credit from the bank. But you know, I know that most businesses don't go that route either. So I'm not sure I can answer it. You know, we actually work on some companies and how to find solutions there. But to be honest with you, we usually work with a lawyer at that point because, you know, there's a big legal component depending on what the contract was initially, what's your refund policy and things like this. So I don't think it's a one fit all, but I would encourage you to address it. Have a list of all the deposits and who it's from and when you received it. Understand what is your refund policy, and then again, communication. You know, be upfront, be transparent, come up with a plan. But I would say that the deposit question for your industry, the hospitality industry, is probably even worse than the cash flow situation, because, you know, your cash flow situation, you know, is one issue, but you're talking about somebody else's cash flow, and that's usually a sticky question. Andrew, maybe you have another.
Yeah, in the ideal world, you would only need to give back the deposits to everybody who really needed it or wanted it, right? And so figuring that out is the tricky part of this. I think how I would approach this is try to test a little bit, test the waters. A personal example that I can share is with one of the camps, they said, no, we're not going to give refunds, but we're going to do this virtually. And we were thinking, you know what, we probably would have been okay if they would have just given us a credit for next year. We would have been fine. But instead, they're saying, no, we're just going to do everything virtually. And it's like, honestly, we've been inundated with virtual stuff and our kids have enough screen time and we don't even care about that. So they really didn't address our needs correctly. And so it's understanding your customers and making sure that in an ideal world, you could offer, you know, full refund to some, partial refund to others, and, you know, a credit for next year's to others that you could manage it.
Andrew, kind of part two goes with that kind of rolling over deposits to next year. So if somebody were to hold a deposit for next year, obviously it'll affect their cash flow because now that family won't be paying another deposit for next year. So yes, how do you kind of plan that out or look at that as you're doing your kind of spreadsheets for your cash flow?
Great question. It's simply a one line that says, you know, amount of what is your unearned revenue, we call it in the finance world. And when is that going to come due? So out of your anticipated 100 campers for next year, how many of those was prepaid? Was it 50%? Was it 25%? And what is that? How does that translate to your cash on the bottom line? So we did not have that modeled out in our spreadsheet, but that's actually a quick fix, knowing what that amount is and how that would impact the business.
And that's actually why we added the monthly cash flow and the monthly budget, because in this case, right, most businesses, they have 2 or 3 months ahead of them. And if you think about a restaurant, right, they may be closed for a month and then they're going to reopen, let's say on July 1st. So they may be able to, get back on track. In your case with deposits, you for sure are into month of maneuvering the expenses. And so you're going to have to make decisions about how to save money or borrow money, or maybe, find investors or get partners, just to go through the next 12 to 18 months. Talking to our colleagues in banks and workout departments, they are getting ready starting, in this summer to work with their clients and work out all those loans and help them. And then ourselves too, we're expecting clients asking to help them with going through the next 12 months and be strategic and finding ideas on how to get, get through this.
So yeah, definitely. And I think one of the points, Jacques, as we were kind of planning this session, we talked about at least if you know kind of what the impact of that deposits rolling over is, now you know where your gap is in revenue and can figure out either how to make up that amount or how to cut your expenses so that your next season isn't fully at risk.
And again, you're not alone. Everybody is dealing with the same thing. So if you know that you have $50,000 or $100,000 that you use through the winter or more, I mean, most people probably have a lot more, and it's used, then, you're not alone. So, let's come up with a number. Let's look at individually what you can delay. And then let's have a plan, not only to address the refund, but also the expenses that you're going to have and no cash coming in. And, that's why the planning and the cash flow and the communication are the 3 pieces that are crucial.
Yeah. Another kind of question that came in, but I think you kind of already answered it a little bit in your being transparent piece of your slide is, one strategy might be to ask people if they're willing to use their deposit as a donation. And for nonprofits, make it tax deductible. So the money's staying with the camp, but it's not necessarily going towards camp expenses. And that's a great idea, right? I mean,
yeah, absolutely. I mean, a friend of mine has a school, as you can hear by my accent, I'm from France, and she has a school around, art and French for young kids. And, she's getting towards the end of the year, and obviously she stopped the school, and, she's in a cash crunch. And that's what she did. She asked the parents not only if they could pay the month of April, like Andrew mentioned, but also if they could help her with donations so she can, keep the school open. And most parents accepted because they see a value. It goes back to what we talked about earlier. The loyalty and the brand of your camp is important, and people probably want to help you just go through the tough time.
Yeah, that's a great point. Another example I can share that I didn't even think about earlier is one of the camps that we're with, they actually made an effort to call us directly and to speak with us. And that was 2 weeks ago. And then yesterday we got the email saying, hey, there's potentially, could you still pay the last tuition even though you're not utilizing our services? It doesn't feel great, but I really appreciate the effort that they made in being transparent and communicating what's really going on. They're trying to stay and survive, and they're a great facility. We've always had great experience with them, and at the end of the day, you have to appreciate the transparency and honesty. And that goes again back to being, under promise and over deliver.
Well, guys, looking at the time, it is just about 2:30. So, and I think we've covered most of the questions that came in. I think we said it at the beginning, but I'll say it again for anyone who joined us late. I believe that Jacques and Andrew are going to share their slide deck with me, and along with the recording that will get posted on the ACA's COVID-19 resource page on the web. So if you want to share this presentation with a colleague who might benefit from it, there will be the opportunity to do that. Jacques and Andrew's contact information is up on the slide now. So as they indicated it so generously, please feel free to reach out to them if there are any additional questions. And with that being said, I just want to say thank you so much, Jacques and Andrew, for your time today. Thanks to Jim Chalmers for kind of making that connection so that we could provide this wonderful resource with all of you. And again, ACA is here for all of our camps, so let us know if there's anything else we can do to help, and we will do our very best to be a resource for you all. So thank you, guys.
Carrie, thank you so much for having us.
Take care. Good luck.
All right. Thanks, guys.